today, because a growing company can't wait for ideas.
Healthy profits from Oxford Health Plans. The managed care firm posted fourth quarter earnings of 32 cents a share, and that doubled Wall Street estimates and reversed a year ago loss as well, which was 42 cents a share. But the earnings news did nothing for Oxford Health shares today. They fell 8%, but the stock is also up from a low of about $8 a share. It finished down 1 at 14 3/4 today. Puma Technology continued to roll on Wall Street. The software firm reported a loss of 2 cents a share today, but that is a nickel better than the predicted loss of 7 cents a share. As we told you yesterday, the Wall Street Journal rates its stock the best performer among 1,000 companies evaluated for their shareholder scorecard. Question is, can Puma keep their performance up? Puma Technology CEO Brad Rowe joins us now to tell us just all about that. Mr. Rowe, nice to have you here. Welcome.
Thanks for having me.
Congratulations. You beat the street handily, and the stock has been performing to the upside today. What drove the bottom line?
Well, I think that our core businesses remain very strong and predictable, and the revenue momentum that we've generated for the past 5 quarters just continues to roll on, as you say.
The stock, let's take a look at the stock performance. We have a year chart of Puma Technologies, and it has been a good latter part of the stock's performance, but for a while there, you were pretty flat, trying to kind of find the groove for your company, and now you seem to have in this wireless technology and the handheld technology and what's called synchronization. But there are a lot of people who also want into that particular niche. How are you going to combat the competition?
Well, I think the NetMind acquisition, which we just closed and announced today, is actually going to be a key component in doing that. If you look at what Puma has today, Sue, I mean, we have a very comprehensive and broad range of what we call mobile application services that range not just synchronization, but other personalized services such as notification, web personalization, web rendering. And so synchronization is really just a component of what we do. So if you want to compete with Puma directly, you're going to have to provide a broad range of services and not just synchronization.
So you're not worried about the Qualcomms of the world who also are embracing, obviously quite heavily, CDMA technology and the move towards mobile computing, if you will?
Quite the opposite. We see the mobile equipment suppliers like the Qualcomms of the world and the Nokias and the Ericssons as potential partners. In fact, just last week was announced what is called SyncML, which is an industry-wide consortium to actually open up devices to the types of services companies like Puma and even our competitors provide, so that we'll have a worldwide open platform for all devices. And we think this is what needs to happen to really grow these markets to the next level.
And obviously growth is key, especially in a business that is competitive as yours. However, some of the analysts on the street, one of them, Diana Huang, an analyst for International Data Corporation, questions whether or not your company isn't spreading itself too thin, whether or not you shouldn't focus in on one particular sector and then grow the business up. How do you respond to that?
Well, we're highly focused. I mean, our marketplace is the ubiquitous mobile internet, and we believe that by providing the greatest breadth of services to that marketplace, that we're very focused in on the marketplace. So, but I understand Diana's concerns. I mean, you've seen a lot of companies go off in disparate marketplaces that maybe are out of their core competency, but Puma's doing quite the opposite. We're highly focused, and we plan on going on after the very important players in this marketplace, ranging from portals to wireless carriers to just about anybody conducting e-business. And that includes corporate enterprises as well.
Well, you certainly are in an exciting business. Best of luck, Mr. Rowe. Thanks for joining us today.
Thanks for having me.
Brad Rowe, the CEO of Puma Technology. When we come back on Business Center, we'll tell you about a big win for Lucent that's worth some big bucks. And the CEO of a major U.S. corporation is going from capitalist